Hello traders, so in this lesson, we're going to cover the seek and destroy profile. So to keep it simple, a seek and destroy profile is a high and low being set as a trap to engineer enough liquidity for a sweep for end of the week reversal. So when it comes to this model, the rules are pretty set and it's made to complement current price action. As you know, price action has changed and what might have worked for you in 2018 does not work anymore. Price does deliver a little bit different. So these rules that I made are perfect for this current price action. So when it comes to your seek and destroy profile, the rules are pretty rigid. So you really don't have to go outside of your rules and you must follow these rules step by step. So let's say you are in a overall bearish trend. So the trend is bearish on the macro. So now on Monday, price will set a low and on Tuesday, price will set a high or vice versa. So what do you have now? You have so far the low of the week and you have the high of the week. So what you want to do is you want to mark those. You have the low of the week and you have the high of the week. So what happens next is on Wednesday, price will not break either of these swings. So price will stay inside of the range. So obviously our ranges are low and our high, and on Wednesday price stays within the range. And what happens here? Smart money traders are being trapped to take an internal setup. So here you have your order block traders, and here you have your breaker traders. And when it comes to your retail traders, you have your trend line traders taking a sell here. Why? Because the overall trend is bearish. So traders are being incentivized to take a sell. So what happens on Thursday? So on Thursday, price will come up, take out the swing, and close bearish. So what does this tell us? The clues we have is the price took out anybody that sold here. So anybody that sold on a Wednesday, their stop losses would be right here. And not only that, you have all your breakout traders thinking, okay, the trend has changed, the macro trend has changed, and price will be bullish now, and they want to catch a early reversal as far as your change of character goes. They've been trapped right here. So now on a Friday, what you can expect is a bearish day. So price will start off as a micro fake out, which would be a bullish swing, and then price will close bearish. And as far as where you trade here is, you're not trying to predict this. You're obviously not trading on Wednesday, and you're definitely not trading on Thursday because this is your clue day. So this is your trap day, and this is your clue day. You are trading on a Friday. This is where all the probabilities are in your favor. And this is what makes the seek and destroy profile one of the highest probability weekly profiles, because you can predict the daily candle as far as Friday goes. Before you proceed with this video, make sure you like, share, and subscribe. As you can see, we do have our monetization turned off for a better viewer experience. We don't want you guys interrupted with ads. So let's take a look at this example. So what do you have here? Your Monday swing high and your Tuesday swing low. So now what could happen on Wednesday here that could ruin our seek and destroy setup if price breaks out of any of these ranges? So if price breaks out here or breaks out here, this will nullify this profile. Price needs to stay within this range. Why? Because Wednesday is our trap day. Just remember, Wednesday is our trap day. Statistically, most traders lose their money on Wednesday, especially intraday traders. So now Wednesday ended. What happened on Wednesday? We had a bullish day. Price open here and close right here. So this is a bullish candle with a wick. And price did not break out either the high or the low. So let's look at Thursday. This is where we get our clues. Price is breaking out. So what are we waiting for? Again, a lot of impatient traders would look at this and instantly wait for once price closes bearish here on a 1 hour candle, they would be looking for setups here. And again, if you want to trade in high probability, What we're waiting for is the complete day close. We want the daily to close below here. We want the daily to take this liquidity and close below. Why? Because we trade on Fridays. Patience, patience, patience. Okay, so now we had our trap. Price took out the swing high, which was our Sunday, Monday high. This was our Sunday, Monday high. This is the Sunday candle open high, and then never visited this area again. So now this is our purge. Liquidity's been purged on our clue day. This is the day where we get our clues. So what are we going to do now? And we're going to cover entries at the end of this lesson. But let's say you have no idea how to enter the market on the lower time frames. You have no scalping skills. You have no intraday trading skills, and you're just a beginner trader. You can always do this. As amateur as this looks, you can always just take a one-to-one trade right here and look at it from this point of view. The seek and destroy profile, when alongside with the trend, is a high probability trade. By high probability, I mean 60% and above. So look at it as a coin flip, and every trade is a bet. So when taking a bet, you would want the probabilities in your favor. And when you have your seek and destroy profile in line with the trend, so right now we're trying to go bearish, and the overall order flow is bearish, you're taking this trade with all the criteria where the high and the lows been made on Tuesday. Wednesday was our trap day, which is our consolidation day. And on Thursday, you had your stop hunt, which closed your daily inside of the range. So now you know that this daily candle, let's look at it from a daily candle perspective. The daily candle can open up right here, wick out, and then close bearish. So what we're banking on here is the probability of the daily candle being bearish. And we're going to cover how to enter these trades in a micro sense. And if you look on the daily, you can see this was your Monday. This was your Tuesday. Let's zoom in. So you had your high here. You had your low right here. Wednesday was what? Your consolidation day, which is your trap day. You had your stop hunt on Thursday and closed inside, and then you had your red candle. And what we're doing here in our seek and destroy profile is we're just predicting this candle. We're predicting the color of the candle. It's just as simple as that. So a way to look at it from a daily candle perspective is, so you have a bearish day here, and then you have a bullish day here. So now you have your low and high. So this would be your swing high, and this would be your swing low. Actually, let's add a wick. Okay, so now you have your swing low and your swing high on Monday and Tuesday. So what happens next? You would want Wednesday to stay within the range. What you don't want is Wednesday breaking out. Either way, this will negate your profile. This will not be a seek and destroy profile. So let's say on Wednesday, price stayed within the range. Your daily candle stayed within the range. So now on Thursday, price took out this level and closed back below. So you have a bullish candle. You have a bullish candle with a wick that took out price, took out our previous weekly high. So now, everything you learned, how would the next candle look? Your next candle would be bearish. And this is all it comes down to. So let's talk about our entries. So our seek and destroy profile a lot of times happens during your NFP. So NFP is your first Friday of the month, and we are focusing on obviously the Friday push. So a lot of times your NFP starts off as a consolidation and then shows a strong move. This consolidation here is your base. Now I talk about bases a lot. This is where all the orders are accumulated. So what happens is a lot of times, again, not every time, but a lot of times, your base occurs during Asia. Your move away from the base happens during London. And during New York, you're waiting for a pullback to this area to take a rejection from here, to take a trade to the nearest swing point. And where would your stop loss be? Well, your stop loss, if your entry is right here, your stop loss would be where the daily high, so the current day high, so your Friday's daily high. So if price opened up right here and then gave you a base lower and then dropped, then your stop loss would be right here. It's above the current day high. So let's take a look at a price example. So let's talk about our entries. So this is our Friday open. Again, what we are looking for here is we're looking for a base, a strong breakout, then a retracement back to the base. And this would be an entry. You can always look inside of a base, like I explained in previous lessons, how you can find a order block inside of your base for a more conservative entry. We're looking for an aggressive move. We have our aggressive move. So this is our base. Our base is our swing low and swing high, and price being trapped in the middle. So now if you take a trade, you can take a trade once price revisit this area, and your stop loss would be right at your Friday daily candle open, and your TP would be the swing. So let's wait for retracement. Okay, so your TP would be right below this swing right here. And if you want to take a conservative entry, which a lot of times price won't reach that far. So if you want to trade more often, because it does take you a while to look for a seek and destroy setup, you would take an entry right here. But if you want to take a conservative entry and your patience is even stronger than the average person, then you would take an entry right here. So let's make this black for visibility. Then you can take an entry right here. But a lot of times price does not reach your order block inside of your base. A lot of times price reaches your base and reacts instantly. And that's your TP. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe. And make sure you use code ETMARMY for 20% off everything on the website.